let's dive right in. Today we talk about kind of a parallel of umbrella of objects called risk assessed moves. Risk assessed moves are all the things that we don't touch on in the course of mentorship. It's all the pieces that are kind of outside of a risk parameter that we're willing to take. So this is a large umbrella of different things: backside trends, reverse levels, where a level doesn't get quite touched but it moves up. Maybe we can start there on a nice easy one. We can find an example here. This is going to be interesting
So
to go through
typically
risk
in a
assessed
move,
moves.
we can, and you know where we
Just to give a note on it, what would have been a very pulled back version of risk assessing a move. So this is going to be interesting to go after over this.
we can go back to here. So we're not going to worry about this. We'll do this piece after. There's always going to be these places where we expect a trade to go to, and it doesn't quite reach there before taking a move. So it covers a large range of trades that have never been taken to date, right? This covers a large range of, oh, it never quite hit our level. For example, if we were to use this level right here, oh, it never quite hit our level. If we go to an hourly, you'd mark this, and yeah, okay, fine, it hits the hourly. That's fantastic. You know, everybody here is trained to go after these greedier moments because, well, quite simply, they work well, and you don't really have any risk on them. Here's another one. Oh, this was never really hit, but then you could go to a 1 minute chart, and you could find the greediest level and say, okay, well, this was never really hit yet, so this is what we're trained to go after. This one, because this is tested in the moment, and that's fine, and it goes there, and that's great. And this is tested, or no, this is not tested. So this is kind of where we'd expect it to go, and then this one is where we'd also expect it to go next. Right here, we're going to mark these ones yellow for this example, just because. Oh, we'll do green. That's good. Green. Do green like this. Do green like that. It's perfect. So they never really quite go after these. Actually, this one does, but then it goes kind of right through. Goes and targets something much different, and then this green level, fine. We can move it to this point here, and it never quite goes after this level, but it does go after this one right here, right? So it does go after this, and then it goes after this one right here. So this one was a good level. This one was not a good level. This was a good level, but not under our criteria. So you kind of have this mixture of good and bad levels, and then this one would also be like this, and then this one would also be green here.
So just noticing when Butterfly Effect had came out, we were doing risk assessed moves, really just doing a lot of that work in my head and just kind of categorizing it as good and not good instead of kind of giving it this ranking system. But nevertheless, always with moves, we look at risk and how to execute the trade where it makes the most sense is a very easy term to say, but then a very hard thing to follow, right? Because we dive into risk assessed moves, and this is something that we've created quite an elaborate system for. So even just if you so I would say it like this: you're doing your technical analysis, right? You're doing all your TA, and like I marked this trend yesterday on stream. Sure, whatever, great. Or yeah, right at the end of stream, I marked this trend. Even if you're not really wanting to take a trade, it's good habit to start thinking about everything in RA. Like, oh, I wouldn't be taking this trade under trend, but I think it's good to understand that there's a deeper part of this range. So yeah, it's a good trade, but there's probably a better spot. A quick and easy way to say it. That's completely non-responsible, because you're not going to be taking a trade here anyway. So you'd be looking at this and just saying, oh, that's a good spot. But then obviously the best spot, you would already see that this has been tested. So the best spot would be this 15, right? And then you could even maybe go find a combination level here. So yeah, this 5-minute reverse is tested there. I think the 15 is fine. Coordinates with a 5, pretty good spot. I don't necessarily need to do RA on this. Doesn't mean I'm taking a trade on it, but understanding just those core principles of risk assessment is like critical. Even if you're not, it's a good training tool. Even if you're not going to do a full RA mock-up, it's a great training tool to even start saying like, okay, I understand this is here, but maybe not quite the greatest move, but something a little deeper in the range, right? Like a risk assessment should be going through your mind on every single trade, regardless if you're taking them or not. Even you look at this and the first thing you see is, oh, there's a reverse level here. RA, this tested, probably going to be RA here. Best move. That looks okay, but probably not the smartest since the level's already tested. It's going to be kind of high risk, but could it hold? Yeah. Then more likely here. And then, that is a ladder point, even if you were to move that there, mark it through. So whatever 4-hour moment we marked, you mark it through. And then you're just looking for the more polarized pieces of the chart. Like obviously it's not here. This is testing something else much lower, so we kind of need to go and find that, right? It's probably a 5-minute, maybe, if I have a 5-minute backside. So 5-minute backside, kind of at your next point right here. So maybe that coordinates nicely with that 15. That's kind of tested. This is also kind of tested. You could also be here. So now I think you can just kind of, without really marking and doing like a full RE mockup, I think you kind of already have two choices. The quick understanding of the 15, although the 15's tested, it can still kind of go after that. I think at this point you even go one time frame deeper. 3 is tested through there. 3 is tested through here. And then it goes through that. So what is it targeting, right? You got to start asking yourself that. And then, you can do your full RA mockup, but to kind of just have a quick glance always at every single thing you're doing is pretty powerful. You could be saying it's laddering off of this. So then I would be looking to, and funny because there's no origin here, so there's nothing there. So I'd be looking to see what kind of reverse level you have inside of this part of the range, just as even kind of like an easy mock-up. So right here, right? Now we're kind of getting into, like I'm kind of doing RA right now, but yeah, it's good to just kind of, even if you're not going to do a big mock-up, to have that kind of and you just get into a queue here. So it really just brings you right back to here. Maybe you're going to go after this level here. It's kind of untested. You could say the back side's tested, the front side's not. So now you can get into a queue where if it's falling down, it's tested back here. Now it needs to test back here and then something in there. So you could have, also coordinate the reverse level from here. You just get into this habit of like this habitual nature of constantly saying, oh, this is good, but what's better, right? Like even, I think that's a good point to kind of stick onto here. Just saying that, this is good. And the way I'm doing it in my mind here, when I first released Butterfly Effect, it's like, okay, well, this is good, but this is much better, right? Obviously levels are tested. There's deeper parts of ranges.
So this one would be green as well. And we actually have to adjust this one. Also, we'd be told to go after this one here, and then possibly even this one here, and do any of these get touched? And none of them get touched. So this is kind of, well, 1, 2, 3, 4 trades never to be taken, right? But then they do exist on another time frame. So this is all a part of what's called risk assessed trading. So when we go to a different time frame, we can use the hourly here, for example. We have the hourly here. This never gets touched, so we can actually just move that one back, and we can go to maybe a 4 hours or 4 hour. There's no 4 hour. Really, what we're trying to do right now is find this level. Like I said, there's no 2 hour, so maybe it's I think we just did the 1 hours or 15-minute level there, and there's
what's better. Love it.
Oh, actually, that doesn't even get touched. There's a backside level right here that doesn't get touched. There's nothing there, so there's this right here.
And at this point in the lessons, we hadn't gotten to reverse levels yet. So you won't see me mention them very much. I just start recently at the end of Butterfly Effect, mentioning reverse level. So you may see some spots where I'm just kind of going through like a simplified version of RA where I'm saying, oh, it's going to go after this whole level, that whole level. I don't remember, but just to be mindful that, the last piece of Butterfly Effect was reverse levels on purpose. So at this point, it would have been being briefly and lightly mentioned reverse levels.
And that kind of ladders down a deep dive. There's nothing there. Come on. So test the range on this one. I'm wondering if there's anything else here. Obviously, it's going to be the backside to a lower time frame. Touches it, deep dives it. Possible base being created, right? So we can make sense out of this. But again, not a trade we would have taken because, hey, it didn't go after our criteria, right? So this is important to understand that there is a lot of trades that we have not looked at for this specific reason. So there's trades on, and so we did that one a little bit. Let's do another one here, like this piece over here. Yeah, okay, fine. So this goes and back tests something here. Let's just start with the hourly, see what it does. this goes and back test the top of this, right? So it goes and back test the top of this. That's fine. That's easy to see. And you would say, okay, well, here's kind of the deep dive point to that, making this possibly the base for the future. And then there would be some kind of other level in here. And we never really get entry there. So this is a scenario where you have to start using all your different information to give you the pieces of the trade that you're missing, the pieces that haven't been filled in for you. So in this moment,
Yeah, and so the pieces that haven't been filled in would be going down the queue of RA, right? All your different 10, 9, 8, 7, 6.
and here, for example, if you were right here and you said, okay, top of the range gets tested, perfect. That makes a lot of sense. The top of this range on this time frame gets tested. There's no 4 hour here. There won't be a 4 hour there. The 4 hour would be down here. Maybe this gets tested next. I'm not sure. But anyways, the top of the 1 hour gets tested. The 1 hour greedy point gets tested. And let's just fast forward this. And it actually never gets back tested, right? So we can go back to that hourly chart here. Take this replayer, go to the test of the move, take this off this 4 hour. And this is a point where you'd have, you'd have your trend now developed like so, right? You'd have your trend developed like this, and more likely a 4 hour point there. Yeah, it's the 4 hour point. And then you would have also been able to adapt this out, right? So that you would have something that would be this point to this point. So for this, we're just simply going to mark the base of this move here to that there.
So this would just be
here, which chart closes to here. So you kind of have these two
global
different
trend.
trends against what is stabilizing move, right?
This would be a local trend because the global trend would have been the first one we created.
You know what? We'll go gray. We usually go with a gray for these lighter levels. So in this trade, you're going to see here, this level is stabilizing the move. So there is kind of
so risk assessment here on this move. What's the key thing here with this risk assessment on this move? Well, let me rephrase that in a way that's not set up for failure. Okay. What is the hidden factor that we never talk about in risk assessment, like in butterfly effect, risk assessed moves versus what we do now? Like what would be kind of a critical component here? Or what are your guys' thoughts? Even let's start there, or your critical component. What is the thought process with this risk assessed move? Time bombs. Okay, let's go with that. What's time bombs here? Like, tell me more about that. Finding polarity. Okay, we can talk about both of those things, finding polarity and time bombs. Let's elaborate on that. What's so important with time bombs here, and what's so important with polarity? Where would we find polarity in this move? That would be another good one. Want to go down the road of polarity? Where do we find polarity in this move? And what does it mean for the rest of this RA if we find polarity? And in terms of time bombs, well, what are we talking about with time bombs? Fancy word to say, but let's put value to it. What does it mean when we say time bombs? RA is going to be a major point to butterfly effect too. So we're going to be working with it constantly. Polarity, the point we must exit. Okay. Okay, I seize onto something interesting. This was holding an origin level. I believe I noticed that too. On the higher time frame, not on this 15, but I believe it was on maybe the 4 hour. I noticed that earlier in the replay too. So good point. So in a way, there may be an upper polarity with a subgroup. Okay. We know that this 1 hour hold is not the polarity point. So we have to have time bombs to get out before it could go deeper. Okay. Where would we find polarity in this? Let's do like this. You see my mouse on screen. We're going to go, would we find polarity on? This is 1. The second one is 2. The second one is 3. Where could we find polarity on this? Or is it even in 1, 2, or 3? Again, just chronologically, first test down, micro range 1, range 2, range 3. Is polarity even in these, or is it somewhere else? Origin of the 3. So you're saying I see that the origin would be polarizing the move. and it would have a subgroup with tests underneath it so that it has to come back over top and hold higher. I think this is a good take. I think this is smart. Yep, I would agree with IC. What else could it be? Base of the move. Okay. I think IC has a really good and very good and very valid point, but I think there could also be another scenario. Higher time frame. It could be a higher time frame. Talk me through it. Talk me through it so I understand your thought process. IC did a good job of that, and Triple Sam did as well. We know that this 1 hour hold is not the polarized point, so we need to have time bombs to get out before it could deeper. Well, we can't tell if there's a trend because it's a replay, so we won't be able to tell there, right? I think another possibility is that we could also ladder off of this what looks like this could be one time frame on a higher time frame. This could be a second time frame, so you could have ladder, 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 or you could have ladder, test off this ladder, create that range. So like I think polarity can exist anywhere starting from here down. So I think polarity exists anywhere below this. So you have kind of a where's polarity in this move below this, and I don't even want to say above this. I want to say whatever this is testing, if that holds it again, because it could go down, test it. That could be the test of an origin level. So I believe polarity exists at a minimum from here down, and this would be more geared towards the top side of polarity just because of how many potential scenarios there are. With that said, we could assumingly have a 10 and a 9, making this an 8, right? So what does that mean for the trade? This is an 8. The reverse level could be a reverse level, could be a reverse level that's getting tested to create an origin. We can't really see that data, so we can only kind of assume, but that's a good part of our job when we look at candles like this and we can say, oh, okay, well, it could go below this, and what are the possibilities? Like, what could it do, right? So that's a really healthy thing to do, is to say, oh, well, we don't know what it is exactly, but it could do this. That this is something I do on the charts constantly. This is something I'm always doing on the charts. Watch my streams and you'll see me do it all the time. It's always good to have that kind of ability to have that vision. We've talked about vision last week, that vision to see things without seeing them, even if they're not there, to have those thoughts going in your mind is constantly opening kind of the pathways of your mind. It's always opening what you should be looking for. Oh, should I look for an origin? Should I look for a test? And then you got this kind of hyper analysis constantly going through your mind, right? So if that hyper analysis is constantly going through your mind, you're more likely to pick up the things that you wouldn't have seen before. So that's starting to get down that path of how you create vision, right? You just kind of start to say, oh, our screen is black right here, and God bless YouTube for having this black bar on the side, because this is kind of like the perfect, always looking in the dark. And what could be here? It's like kind of trying to imagine or illuminate this black spot of the chart, always trying to imagine what could be there, right? So it's something where that, that fear of failure and creating vision for yourself, it's almost trying to fill in those blanks of the things you can't see, right? Which is a huge, very powerful tool. Untested hold, there's a trend, reverse level. Yeah, these could all be true, right? But again, it's that ability to create vision. Like if I was to go on my chart right now and go like this and say, oh, we could test here. Well, what else could be back here? Yeah, well, there could be an origin level. This could actually be testing an origin level right here. We can delete this trend. This could be testing an origin level. It could be a fractal time frame. We're on the hourly, so that means the 4 hour could have kind of 2 points. So I wonder if we just created the 4 hour trend. I wonder if actually this is not hard closing over something back here and there's an origin level. So I would kind of think, okay, there's an origin level. This could be a 4 hour trend. We could be testing a reverse. And if all of those things break, where would the polarity be in this part of it? And where would it be on the left side of it? So you can kind of reveal one candle at a time. Okay, so we could kind of have polarity more like up here, right? Like there could be like a polarized origin up here. And I don't know, I'm just kind of doing this on the fly. This could be ladder, ladder. That's obviously a broken trend. So now I wonder, is this the bigger time frame interior trend? So do we now have something like this, right? So we're kind of trying to fill in those blanks always. Okay, go back a little bit. Okay, we've gone back way too far. We have an interior trend, higher time frame. Let's not go. Okay, we can go there. Oof, we don't want to reveal too much of this left side. Okay, well, it's not here, but it can be there. It's not there. It's too interior, right? So you could start with a 4, and you could go here. And now we can create a microcycle. We can go to the 1. We've now broken that 1 hour time frame. So now we can go and adjust it to here. So now we have the 4 adjusted to the 1. right? We clearly have no 15, but at least we have a trend. Now I wonder if there's an origin level here. Like I would almost wonder, do we have an origin level? Like I said before, you know, because you're trying to fill in those dark spots, right? You're trying to fill that in. So there's no 5 minute, obviously that's hard close. You can go back up to the 15. I don't think there's going to be a 15 there. Nope. Nope. Also negatory. So this is not an origin. This is not an origin. It is back testing the breaks of the moves. So now I'm starting to think that it's creating a higher time frame origin here. Possible question mark, which would be the same thing. Not quite. It never hits that. Okay, so now I'm thinking maybe it's creating a lower time frame origin interior to the range. Here. Okay, we've got an origin level. Right on. Good. This one isn't an origin yet, but we do have. Oh no, we don't. Never mind. Hard closed. Didn't see that candle. We don't have an origin. We don't have an origin at all. Test the move. Trend. Yeah, no origin to test. Nothing to break down. The move is purely laddering. There is going to be no back test of an origin. It's going to hold levels until it breaks its trail, and then it's going to polarize itself down through trend. Makes a lot of sense. I can see how this is super valuable. Yep. Always kind of filling in those blanks. And now there's something else here that's important with time bombs. Now we know that this is, we're just going to assume this is an 8. What does that mean? What does that mean for the trade if this is an 8? I'll let you guys answer and I'll start talking about this again. Having that foresight to see where those levels could be is highly valuable because it allows you to understand in a very quick way. We're down here. What could we possibly be back testing? Because you will always find yourself. Now we're going to talk about the practicality, the practicum of trading. You will always find yourself like this. Oops, no, we don't want to do that. You are always going to find yourself like this. In one way or another, you're going to walk into your chart every morning and you're going to be like, okay, what are we doing? So practicum, or, you know, if you were to put on your work boots and go use a sledgehammer to break up concrete all day, or whatever you're doing for your job, every day you have your work boots, you walk into work, and there's a certain element of practicum where you are faced with just the raw data right now, because the first thing your eyes are going to do is you're going to look at, oh, it's at 40,392. Okay, what did it just test? Okay, cool. What was that? That was testing this. Oh, okay, cool. So there's a certain practicum that happens with trading where every day you will walk into your charts like this. So this is something that's critical, is kind of having that vision and that foresight to say, okay, what's back here in the black spaces, right? Like what is back here? And it's not the proper way to chart, but the unfortunate reality. And I don't even want to say it's an unfortunate reality. It's good to be aware of this, that we have, like, even me right now on my charts, and I'm sitting here looking at this thing, I'm saying, oh, cool. So we're testing this right now. There we go. I've just become a victim of that practicum layer, or not practicum layer, but that the practicality of walking into your charts every single day, right? And you can't help it. You open TradingView and it goes at the current time frame, and the first thing you say is, where's the move? So all you're trying to do is look at this and create that vision from past. Now, of course, proper TA dictates that we do it from time frame down, but this is kind of how we start our day every day, just to kind of get to a point where we're like, oh, I see it's testing here. Cool. Now let me go do my full mock-up, right? So there's a part of our mind that will always do that and try to fill in that black space back here. I found a 5-minute origin level. Okay, it could be a 5-minute. I didn't even see that. Let's take a look. Definitely be a 5-minute origin level. There, I'm thinking it's okay. So Sam, that wouldn't, maybe it would actually. What do you have marked here? Right here? Yes, this would be an origin. You're right. I thought you had marked this one. This wouldn't have been an origin because that's the first test. Here's your first test. There's the origin. There it is. Bang, Sam found it. Perfect. So that's kind of that same thing where you're saying, okay, it tested something in here. What is it testing? And now it's found that origin level, right? So now you've created kind of an awkward space here that might cycle that origin level. We've got this that's been a 4-hour cycle down to the 1 already. We're still looking for the 15 break. I don't think we have that 15 break. I think this was just the hourly. And then so you can kind of create that space where you're hard closing under this trend on lower time frames with staying above the origin. And if you do it for long enough, then you're just going to cycle through and say, hey, we actually just created a 4-hour, right? So great job, Sam. Nice find on that one. So the thing we can see about this is which time bomb is activated. So if it's 8, we're going to just assume it's 8. I'm thinking there's probably 2 points under this. It's not a 10. It's not a 9. Or if it is an origin level from up here, it could be a subgroup with a couple parts of this range. So we could say, you know, maybe this is 6 or 7. This is 8. So we can say 7, 8, maybe 9, and then maybe 10, which is like kind of the polarity in the move there. So if this is 8 and this is 7, 7 is pretty big time frame wise. We wouldn't use that unless it's the only thing it tested. So 7 hits here, it develops prior to that time bomb being released. Move is good. This one would be an 8. Okay, so what would that mean? What kind of time would we have if this is an 8 for the time bomb? Around an hour time bomb. That's right, I see. Perfect. So once you touch this, you've got about an hour, give or take 15 minutes on either side, maybe even 30 minutes if you want to stretch it. You know, I wouldn't, an hour, 30 minutes to an hour and a half. I kind of like more 45 minutes to an hour and a half if you're going to stretch it, or 45 minutes to, you know, an hour and 20. But okay, you can say an hour with a 30-minute brevity on either side. Not brevity, but a 30-minute expansion on either side. So you hit it, you've got, you can't really tell when this is created, but we'll count it as 15, 30, 45, 1 hour. So at this candle here, this blue candle right here, you're getting close to having to be forced out of this trade. Your next candle by 1 hour and 15 minutes actually closes above it. So it's okay to stay in this trade because you've actually developed your shield in this trade. So that's fine. And you may have a lower time frame shield. But what we do know about this trade, just from these couple candles, is it did create the criteria that allows us to stay in the trade. Again, pretty important to realize the criteria is that it allows us to stay in the trade. And if that criteria is never created, we cannot stay in the trade. So there is an obligation for you to develop this shield. Otherwise, you have to exit your trade. This trade enters, right? Like this executes as your 8 out of 10 time bomb. You must get out of this trade. That's that time bomb. You have an hour and 30 minutes. Like that's it. You have 1 hour and 30 minutes, maybe 1 hour and 15 minutes from this point that if you don't develop some type of shield, you must exit that trade. So this does in this case, but it was pretty close. Like you were maybe 15 or 20 minutes away from saying, regardless if this is holding, I cannot stay in this trade. Now that's a snapshot of this one time frame. So it's pretty tough to see if there's an hourly hold level or anything, but it looks like there wouldn't be unless it's right here because there's no really lower candle closes. So this would be, if anything, this would also be the hourly. So this develops and it allows you to stay in the trade because if it never develops, once that time bomb is up, you are out of that trade. Simple, straightforward, instantly. One thing I was never clear on is what sort of shield counts. 1 minutes are created frequently. But if we have our time bomb, one thing I was never clear on is what sort of shields count. Oh, I see. Like which time frame is what you mean. So when you have those time frames, you don't necessarily need to make the same time frame that you have. Rather, you have to develop. Say you hit this level here. You are going to develop a 1 minute shield. It's going to end up turning into a 3 and into a 5. So once that 5-minute shield is developed, you have to kind of stay above it. And then you're going to try to develop a 15-minute shield somewhere above that. If you can only develop a 5-minute shield and you start breaking those shields, you're not going to be able to create the higher time frames as is. So it's not that there's one specific time frame for every single time bomb. It's more that like if those lower time frames aren't actually developing, it will be impossible for the higher time frame to develop. So if you've noticed when I'm kind of doing our live trading together in this group, I'm looking at the 1 minute, I'm looking for the development of the 3, I'm seeing the development of the 3. Okay, good, this is the highest time frame shield we have. There may not be any 1 minute shields left under that or time frames that are untested. It creates a 5. There's no longer a 3. The 5 collapses, or let's say it creates a 15 with the 5 still in play. The 15's in play, the 15 collapses, goes back down to the 5. The 1 and the 3 we already know aren't there. So your 5-minute kind of becomes the final one because it's using all time frames to try to create a time bomb big enough that it can stabilize. Because say once you create a 15-minute hold level, it's going to be pretty tough to lose that hold level within the time constraints that your time bomb allows. So it's more about kind of creating a trail up into those important moments and allowing, because you have a 1 that develops into a 3 that develops into a 5. If your 5s are collapsing, there's only one or two things they can test, which is a 3 and a 1. So just through the natural course of time, that's not enough time for say an 8 out of 10. If only 1 minute and 5 minutes are 1, 5, and 3s are developing and collapsing, there won't be enough time frame inside before the release of your time bomb for it to create the actual higher time frame. So you almost have to create that stepping ladder, right? Almost think of it like stairs. You almost have to create a stepping ladder of 1 to 3 to 5. And if the 5 can hold, it will eventually create that 15 because it's using that time to actually create that. So I see, it's not that there's one specific kind of thing that you would circle one time frame and draw a path to that time frame. It's more about understanding that the move is developing. And in this case here, like you've got 1, 2, let's count them, 1, 2, 3, 4, 5, 6. By the time you have 6 15-minute candles, your 5-minute time frames have to be holding and developing the 15-minute time frame. Like you have to be developing some type of shield. And if they can't, you're not going to have any shields anyways, because the whole move is going to collapse prior to it. So you're not going to hit a magical crossroad where you're like, oh, 15-minute time frame, we're good to go. Right? More so that is telling you where you have to exit the trade if you cannot create those. Equal to that statement, you would also be exiting the trade if you developed a 15-minute and that collapsed and there's no shields left under it. You would also be exiting the trade in the very same manner. So there's not kind of like one launching point, succession moment where, you create a 5, it creates a 15, the 15 holds, it's the perfect shield. That's too convenient. That's not really the way it works. And then often you get into a point where your time bomb releases your trade without shields, or your time bomb constraint at a minimum comes off. Like here, for example, this time bomb constraint of having to develop something, it has been released. You're not being forced out of this trade due to a time bomb. Now what's going to force you out of a trade is the loss of a shield. You see what I mean? Yes, collapsing a 5 on the 5. Yes, exactly. The same time frame. Hard close, the same time frame created. If you hit an 8 out of 10 and it doesn't create a 1 and 3 minute shields in the first 5 minutes, do you need to get out of there as well? No, not necessarily. As if it were a 10 out of 10. Or see if it drops to the 10 out of 10. No, not necessarily. I think it's always good to create those shields, but you don't want to just start putting a 10 on everything and just say, oh, it only has 5 minutes. There are scenarios on the chart, like you can even find them right now. I'm sure if you were to go to like risk assess part of the move, like right here, let's see if something develops here even. This probably isn't the polarity of the move, so it probably has time to develop. 1, 2, okay, time bombed, it wouldn't be released, right? So you wouldn't be getting out of this trade. All of a sudden you have no shields, right? 1, 2, 3, 4, 5. You've broken your shield. 6. Like at this point, you don't have anything here. It's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Like you've got 11 minutes have passed. Time bomb wise, you should have been out of this trade because you have no shields, no time bombs. But the higher time frame is going to allow you to stay in that trade longer. I'm not sure if this is a 9 or a 10. We haven't done the RA on it, but then you can see where this trade ends up developing. Probably a 3 minute right here. Yep, develops a 3. Creates the 5, still has the 3. Looks like it hasn't quite lost that 3. But the constraint to say, because a time bomb, right? A time bomb, oops, let me do the drawing tool. Time bomb tells you if you must exit a trade. You also have shields in a trade that act as your protection too. So when you are in this trade, it doesn't necessarily mean that you have to get out if your move isn't completely going up right away, right? Like snap your finger and it moves up. The time bomb actually just dictates whether you can stay in the trade or not. You may also do something like this. You may also do something like this. Test the level. let's say we create no shields yet. 1, 2, 3, 4, 5, and we're using a 5-minute time bomb. Regardless of the outcome, if you don't create that first shield, this time bomb forces you out of the trade. You can even go 6 candles. This forces you out of the trade, regardless of shields. Okay. So if this was a 10, this forces you out of the trade. Okay. There's nothing left. The move is already polarized. There's nothing left holding you up. Start moving up in this trade, create your shield. This is an 8 out of 10, which means you've got, you know, an hour minus. Let's even call it a 9 out of a 10. So you've got 15 minutes plus or minus 5 minutes, maybe like 10 to 25 minutes max. 25 minutes would kind of be like your max. 5 to 25 plus minus 10, right? You've created something so that time bomb constraint is gone. Now you need a shield to hold you up. So now you are no longer operating under this, because this alone will force you out of your trade regardless. Once you've created that, now it's moving to your shields and your triggers, right? Shield and triggers. So now the release of your trade becomes when your shield breaks. You're no longer operating under the constraints of a time bomb, right? You're no longer operating under that constraint, because you would have had this as a shield and it's still tested through here. And then it would have been this. So the time bomb can force you out of a trade before a shield is even created. So if your chart looks like this, shoot, we have to go back one more time. So if your chart looks like this, you don't have a hold level created and your time bomb is up, you're out of this trade regardless. This candle makes it so that time bomb is released, but now you're activated into shields. Okay. And clearly collapsing 5 to 5. Yeah. Okay, I answered that. That makes a lot of sense. Yep. Does every shield you create extend the time bomb? No. I wasn't viewing the risk assessment as a distance. Oh, that like the hypothetical, Joe? Or you mean like our hypothetical? Oh yeah, our hypothetical. Yeah, for sure. Yeah, I kind of wasn't really sure how I could word that to kind of make people understand what I was talking about. But so this one here, your time constraint has been released on this, because if you're on an 8 out of 10, like let's assume this is an 8 out of 10, because I do believe there would be 2 more points. Like one is right on your screen right here. And then there's probably another, either ladder point or test of something through. Hell, this could even be a 7 and there could be 3 more in there, right? Or it could be a 10 polarized from polarity, like what IC was saying with an origin level. But then you have to realize that there's 2 criteria in which we fall under. Does the time bomb force you out of the trade? Yes or no? That is your first criteria through the queue of events. Level is here. Hit the level. It has an RA value, right? It has an RAV or just RA value, RA equal sign. This has an RA value. That is your first criteria. If that RA value is not met, you get out of your trade regardless. It doesn't matter, because that RA value tells you how long you're allowed to be in that trade. If that RA value, wait, did I say is or isn't met? If the RA value is met, that means, okay, this is going to be confusing. If the RA value is met, that means it hasn't been able to establish its move. So just, I got to word this in a way that it's not confusing. If the RA value is met, that means your time bomb would force you out of the trade, because like in this scenario, the RA value is, let's just say a 10, because we're only going to use this time frame of candles. We're going to keep it simple here. Let's say the RA value is 10. If that is met, so that means that you have not been able to create a hold level before that RA value is met. You get out of the trade. So if RA value is met, you exit the trade. If it is not met, that means you're operating under shields to leave your trade. So you either leave your trade under the RA value, which is the first touch, or once that's not met, which means the trade is still active because you did have succession, now your shield controls your ability to stay in that trade. So the RA value controls your time that you're allowed to stay in the trade, and then your shield controls the hold level that allows you to stay in the trade. So there's two criteria on which we exit a trade. One is based on an RA value. The next is based on your shields or trigger points. I hope that wasn't confusing when I said if the RA value is met, because the is met statement means that it's true. RA is equal to 10, that collapses, meaning it was true, right? So hopefully that's confusing, but hopefully everybody gets it. Yeah, you can have multiple shields. You can, I see. Because when you have multiple shields, like say you have one here, and then you kind of go up and you make, that's a 3 minute and you make a 5 minute here. You could lose the 5 minute, hit the 3 minute, and create a trigger point off of the trend, right? Because then you would just be hitting trend. And then at that point here, let's make this a little more visible like that. So at that point, then you'd have this 3 minute. But then if you close that trend on like a 1 minute time frame, you're pretty risky here. Like you're playing a balance between, oh, is it going to hard close back over here? Because a 1 minute candle, a minimum of 33% has been met of the criteria. If your candles are underneath it, it could also mean that 66%, if you were 2 out of 3 minutes inside of that time frame, that also could meet the criteria. A 1 minute candle can also be equal to 100% of a 3 minute criteria if it happens on the 3rd minute underneath that trend. So it could indeed be a 1 minute candle that does that. You see what I mean? So you can have multiple shields. Yep, you can. You can. Just the higher time frame ones matter ultimately. Yeah, I mean, the thing about the higher time frame shields is they have ranges inside them. Like a 15 is at least going to have one hold level. So you could backbone a 15-minute hold level and say, oh, you could at a minimum at least dive it once to that final 1 minute level to see if it hard closes over top of it, which then could create a trend, which then would show you this is a reverse. And if that trend breaks, is it going to hit that reverse would be your polarity, right? So in that case, the reverse is your polarity. Or if you hit it like this, you could go underneath it, and that trend collapse could hard close above, and that hard close underneath could be your polarity, right? So it kind of just depends how that trend lines up, because that trend can kind of be a dictator where you always create that weird space where it's like this. You have that space where you're hard closing a trend, but you're staying above this, right? Like what time frame is this trend? Is that going to be enough to collapse the move, right? So you kind of always enter that space where you're looking at the more important information. And then these kind of act sometimes as origin levels when you deep dive, maybe it's hitting something and becoming an origin. That's not likely here just due to how this looks, but it could be. No, I would say probably not an origin in this scenario.
A adaptive nature, a dynamic nature that you have to start applying on your charts and start using to understand if a move is holding. Because really the key piece of information here is that this move is indeed holding. This 4-hour trend.
I would say catch up on all the RA work, iNuke, and it'll answer a lot of the questions that you're having.
Been broken yet. But this
stuff we kind of went over
stabilizing
in the past a little bit.
So we can simply get rid of this to clean up our charts a bit.
But you'll be good once you catch up on the replays.
So in this trade, you wouldn't be looking to back target anything lower. You'd actually simply be looking to either buy this right here or this on the second touch if it can hold this move. So it starts to hold this move, you can rebuy that on the second or third time or whatever. And if you don't get filled there, because that one's that's a little wonky. That one doesn't quite get filled. What you'd be doing is you'd be looking to enter the trade on this because it's already starting its ladder. So this is a part of risk assessing a move, right? And as it gets closer to breaking these trends, you're going to have a better opportunity to get into this trade because quite simply, it's just not going to ladder to that greediest point. So there's kind of two paths a trade will take. It'll either go after the greediest part of its move for an extreme knife catch, or it'll end up holding something like this. Now, this is one of the common scenarios where it ends up holding its hold level like this. As always, it'll hold a hold level until we move through that and we break whatever trend we are looking at, right? So we can go to maybe a 5-minute chart here and let this play for a minute and see if we get filled on our order. And that's kind of a perfect spot right there, actually. That 1 minute candle right there, which gets filled perfectly. Right. So then this is showing you that on this trade here, you are establishing your base of the move, right? Or not the base of the move, but you're establishing the hold. I don't mean a base as in this is the base for the future. Well, actually it could be, but we don't know that yet. but you're establishing this hold level. Is the level being respected? So now you have to kind of move your expectation from what would have been. Oh no, we don't want to do that. We want to go back down here and find that 1 minute level. Now you have
I think a good way to, sorry to go back to this topic here, but I think a good way to think of this would be like this. RA is, can I stay in this trade? RA is, can I stay in this trade? If the answer is yes, your shields will break your trade. Can I stay in this trade? And then what breaks the trade? Am I allowed to stay in the trade? Yes. Okay. What breaks the trade? Think of it just like a queue of questions, right? At first, risk assessment says, am I allowed to stay in this trade? Yes or no? And if the answer is yes, then you're done here and you're shifting to here to saying, okay, what can break my trade? Which is now your shields and triggers, right? Shields and triggers don't happen until RA is complete. You can start developing shields and triggers during RA, but there's no, you have to meet the criteria of RA first, which is, can I stay in this trade? And then, these timeframes up here tell you that based on how you've RA'd it. So I think that's a really clear way to think about it. Can I stay in this trade? Yes or no? And that's the first step to every trade. Am I allowed to stay in this? No, not allowed. How come? Dad said so. Dad is RA, right? Dad said no. Okay, can't stay in this trade. It doesn't matter what shields are developing. Can't stay in this trade if RA doesn't allow it. If RA does allow it, then you say, oh, okay, we're allowed to stay in this trade. We're allowed to play. All right, what can we play with, right? And then that's it. That's your CA. So I think that's maybe an easier way to think of it, not if condition equals yes. That's the way I kind of see it in my mind. But anyways, I think that would be just like the easier way to look at it. Am I allowed to stay in this trade? Yes. Okay, where are my shields?
have to adjust your expectation to what would have been this level here, right? Like we're gonna use
a binary, like a binary tree of choices
for this one.
Yeah, exactly.
This is our expected.
It's very binary. Like yes or no. Can I stay in this trade? Yes or no. Yes. Okay.
Out of this trade. Well, that would be more like a profit cap. But anyways, this would be
where's my shields and triggers?
So, you can play and let this thing go down. Oops. Whoa.
And so I think that was like a really important point to understand about this right here. However, we assessed it as we're at 858. We'll come back to this. We've assessed this as what's possibly like let's get that out of the way. We've assessed this at say what's possibly an 8. So that means within the constraints of 45 to an hour and 15 minutes, 45 minutes to an hour and 15. We must at least develop the criteria of RA. Like, have we created a shield? Yes. Okay. Time bomb is done. We're now working in shields.
Start implying on your chart.
Back to 9 minutes here.
Well, we definitely didn't want to see that yet, but that's okay. So this would kind of be your expected level, right? This is where you'd want to set your long. This is where your long would be appropriate to buy. But then this happens, right? Then your move stabilizes against another hold level, right? So your new expected level or your new expected buy should be this. It should be this hold level that's holding this move up. And this becomes a polarity in the move. So no longer do you have this, no longer can this piece of the move hold it up. Maybe it can, but it's less likely because the range is already tested, right? This is already a tested range. It's already trying to test its ladder points. Sometimes it will go straight down to this level down here. Sometimes it will actually go straight down to that level and touch it. You get your perfect knife catch scenario, but we can't always buy the greediest level because the greediest level isn't guaranteed to hit all the time, right? The greediest levels are great and they're large injection points, but then things like this happen where a larger time frame that's stronger holds the move up, such as this, right? So then you have to move what you have expected for your purchase to say, okay, we've tested the top of the range and that's fine. This is more just information. It's not important that it tests the top of the range first. And then this maybe is like a 5-minute backside and then testing the front side. So this being the front side of the move. So that range is tested twice. You could possibly extrapolate that from this. If that exists, it looks like a 5-minute backside, which it is. It's a 5-minute backside right there, right? So this looks like a 5-minute backside to me. And then it actually goes down to the hourly right here. So backside frontside combination, which also would probably be a smaller time frame here. It's not the 5 minute there. This looks like a 15. No, it's actually just the hourly. That's fine. So there's nothing lower in time frames. So then again, your expected entry point would be here. However, this range is tested twice and it's holding. So you have to now set your polarity as the hold level. That is going to be the final entry on this move because this hold level is established. It's moving up, and this is only actually $4 away, close to five actually, $4 and some odd cents. That looks like 75 cents or 4.75. Yeah, so there's only $4.75 away from this point to this point. So you have to move your expectation up in the move. So this is a part of assessing risk in a move and a risk assessed move as to where you're using a more adaptive set of criteria to start entering trades.
So zoom in here for a second. Get back to this. Obviously, your reverse level is your hyperpolarity. That can be active because the amount of time that you have in this trade. So this reverse level, due to the time frame, like the time bomb being an 8 out of a 10, this can be active. If your time bomb here was like a 9, you wouldn't really be able to use this. But because it's an 8 here and we're saying, okay, we've got about an hour and 15 minutes, this is enough time frame to still respect that without being out of the trade, right? Because if the time bomb, like think about that for a second, if the time bomb is releasing you out of this trade regardless, how can you buy any level? So that's an important realization to make when you're dealing with time bombs that aren't a 10, and that in this case where there's this much spread between these two tests of candles, this would not work with a 9 either. You could not buy this reverse level on a 9 because the time bomb will not allow you to be in the trade. But if you are still allowed to be in the trade because it would be, say, an 8, then you can use this reverse level. So that's a really important realization to make about time bombs. And kind of when you have this little, but like, I don't want to call it like an intermediate test, but this test after test where you're testing it once, you're testing the range twice. The time bomb can often be a dictator of, can you enter that trade again? Yes or no? Like, will it hold? How do you know if a hold level is going to get held? Like people always ask me, how do you know if a hold level is going to get held? It has a lot to do with the time bomb in the trade. And then you pull it back to RA. Oopsies. Let's do this. You pull it back to RA and its RA value is whatever. And 8 in this case, yes, this can be a level we still buy because we are still okay time frame wise. If we are not okay time frame wise, like if the time bomb has been released, say it was 15-minute time bomb because it's a 9 out of 10. If you've passed that 15 minutes, you cannot buy that level. If it hasn't, because your RA value there was like an 8, and say this has only been, I don't know, maybe 40 minutes, and you have all the way up to an hour and 15, you actually can still buy the reverse level or the hold level again, for that matter. So that's a really good thing to understand right now as we go into Butterfly Effect 2 to start wrapping your minds around. That's a little bit more of an advanced piece. But if you are still in the constraints of the time bomb, you can enter the trade. If you are not, you can't. So that gives you a very clear indication of how you could create a different type of subgroup, which we will get into in the future. But I think it kind of should make sense anyways. Hopefully it does make sense. It might not, and that's okay too if it doesn't. This is a little bit, well, not a little bit. It's quite a bit out of just, doing RA. But then again, at the same time, it should be a very clear understanding that if you're under the constraints of the time bomb, you can still buy the levels within inside of it. If you are not, that trade has been released. So imagine it's like our binary tree, right? RA has to, like this. You'll have two parts of this trade. You'll have RA and you'll have CA. If this is still active, you can use this to buy the range it was testing. Let's redo that. If RA, here's your level. Here's your level. If RA equals and you're still inside of that time frame, this can still buy those levels. If your RA has been released, you cannot buy these levels. Should make sense, right? Like that makes sense. It might not be practical to use right now because we haven't actually gotten into that because that's butterfly effect 2, but it should at least it should make sense as to why this could be used as a rebuy if it's happening under the time constraints of your RA. But then also that same thing, if your RA time constraints have been released, right? Like if your RA isn't active anymore, there is no CA to do because RA has to come first. Makes perfect sense to me. Love these advanced tips. It should make sense. It's probably going to be a little tough to understand it, but it should make sense at least to say, okay, I get it. So that you can start looking at moves a little differently and say, okay, we're still our time bomb is still up. Like we still have time left in the trade. We still have time left. We can buy those reverse points. So when you're doing your, comparative analysis like this, you're going here and you're doing comparative analysis and you're asking yourself, okay, can I buy this level? And we're just going to use this one for, oh, maybe that's not a good one. We'll go here. Can this level continue to hold? The time bomb will tell you if it can continue to hold. But once that time bomb is up, so if that time bomb is still active, you could just kind of constantly hold this. It could still be active. Okay. All of a sudden, the time bomb break point is here, right? Still active, still active. Let's move over a bit. Okay, man. On TradingView. Oh, we crossed our time bomb threshold. Guess what? Right? So this can often be answered by how long can this thing hold can often be answered by, or I want to say more than often, almost always be answered by what is your RA telling you? Because that's kind of the direct connecting point to how long a level can hold is based off of RA.
$4 and some odd cents. That looks like 75 cents for 470.
Makes perfect sense to me. And by extension, no need to panic if the shield gets broken. And really the first way to start understanding this properly is do your RA and just start not taking trades once that time bomb is broken, regardless of how good it looks. Just start by saying our time bomb is here. If we get out to here, we no longer take trades. Even if you are not taking any trade here before it, you can put a line in the sand almost like I was saying. You can draw a line in the sand and say, once you're past this, it's irrelevant. You can almost start deleting levels at that point. You can almost start doing like this, and you could just say that the level's not even there anymore because the RA has released the move. The time bomb has released the move. So once you pass a certain threshold, there is a point where you're just completely not using the level. So that's a good way to start breaking into that, is just to start looking at, okay, how much time has passed based on my RA? I'm no longer taking trades here. And you're just moving down to your next RA. Your next RA is here. And you're saying, okay, how much we've tested this level once. How much time has passed? Maybe this is like a 6 RA and you could go like way the heck out here. You can still take trades there until there. But a way to break into it is to not take trades just because the time bomb is active, because that would also be incorrect. The way you look at it is don't take trades once that time bomb is passed. That would be the first step in just curating the way to fix bleeding, like a bleed or a leak in your game where you're taking trades and it just didn't make sense. So this is more of like a let's fix the leaks type of information right now, not let's create a system to enter more trades. That's a dangerous slope to be on right now with how little we've talked about that type of time bomb. But right now, this is a good thing to say, let's use this to patch the boat. Let's use this to just not create more leaks. But please don't start entering trades based on time bomb still active so you can just continuously trade it. That is not, look at it as a fix right now. And create your time bombs and understand them, and then just don't take trades after they release. That's the best way to start. Level not even there anymore after time bomb makes perfect sense. So obvious, but so deep. Yeah, so like I said, RA goes into this really deep, like RA is heavily embedded through butterfly effect 2 and a lot of the even more advanced concepts and topics. So, we start talking about that as we're just getting into butterfly effect 2 this coming month. And there's a lot of stuff that's going to really click together and make sense, but then it's that same thing where like until we learn it, it could be really detrimental to your trading if you just had like this time bomb kind of idea in your mind and you're just constantly taking levels because your time bomb is still active. While that may be true in some scenarios, like that would be, a huge injustice of that, right? Does the creation of the reverse level start the time bomb? So a reverse level would just have a value, like it would have an RA value. So does the creation of a reverse level start the time bomb? Does that mean the test of the reverse needs to happen within the time bomb constraint? Not necessarily, Seabass. Your RA is going to have, because you'd be measuring the reverse level, there would be no way to measure it because you're measuring the reverse level against the range, not the reverse level against time. So you could create a reverse level, but then you might create 3 or 4 more ranges above that reverse level, which will shift the way in which RA has an effect, right? So no, not really, because you can't measure a reverse level against time. You have to measure, against RA. You have to measure RA against like the polarity of the range and move up from that polarity. Polarity could be the trend, and the trend could be above your reverse level. Polarity could also be the trend, and it could be below your reverse level. So in one scenario, your reverse level might be an 8 if it's above the trend. If it's below the trend, it might be a 7, or vice versa. So then you'd have almost like a misreading of the reverse level, because you can't measure a reverse level against RA. You have to measure the polarity to understand the range against RA. You know what I mean? Does that kind of make sense? And then that trend could adjust that value inadvertently depending on how the move plays out. Could create a reverse level. You could go up for 4 weeks, create this really sharp trend, break that trend down, go way past your reverse level to create a different trend, which would then change the value of that reverse level. The RA value would change. So trend doesn't allow that. Creation of the reverse does not start the time bomb. The test of the reverse starts a time bomb. Yes, correct, exactly.
Yeah, so there's only $4.75 away from this point to this point.
What was supposed to be an easy lesson, isn't it?
You have to move your expectation up in the move.
Today was supposed to be chill. Today's not chill.
And a risk assessed move.
That's okay, I don't mind.
Using a more adaptive set of criteria to start entering trades. So fine, we enter here. That looks good. It's you're just gonna let this kind of go by here, and you've got entry. So you've got entry on the trade, and now let's start to look at some other time frames, some other things. So it's 23:10. What's happening on the 4 hour here? 4 hours hard closing.
It's a great review plus more. Absolutely
hard closed. Interesting, because it was
time bombs is very
close. So
deep. RA is a whole new type of analysis we do.
The hourly
so RA cannot be done in one sit. It cannot be done in one video. It even can't be done until we. I want everybody to realize that. Just like comparative analysis, imagine introducing comparative analysis from butterfly effect, say lesson, 10-ish, all the way through. You almost have to finish butterfly effect to go back to the beginning of it to make sense of it. It would be the same thing with risk assessment. You'll have a lot of unanswered questions, and you'll have a lot of, well, what if this, what if that, until we kind of get to the end of RA and then go back and apply it all and start saying, oh, this is perfect, exactly why it works, right? Because it'll then just connect in this perfectly synchronized way. But you almost have to think of RA like CA when you first learn comparative analysis. You almost can't even understand it until you get to a point in butterfly effect. And it's probably around events, or maybe a little bit before events. Maybe it's around like lesson 61 or 62, because I believe events, trend collapses. You can't even really, 65. What's 62 is deep diving. Deep diving, trend collapses. It's kind of almost until there, if you study butterfly effect, in which the point you could go back and you could say, oh, I actually get it now. I actually can understand comparative analysis. And then you can do like a really high level CA. You have to think of RA as the same thing, except RA is a building block that connects PA to CA. And CA then turns back into PA, which creates almost like a circle, but then you're connecting all of the pieces of the circle together instead of just having, 3 broken boards on the ground. You know what I mean? So understanding RA, there will be a lot of unanswered questions, but you have to realize that it's the same type of setup and scenario, that the more you understand it, the more you're going to be able to go and look back and say, okay, of course it makes sense. Just like how you said IC, where it's and you said it makes perfect sense to me. I love these tidbits, right? Like it kind of just fits in a way that's perfect from the beginning of it, because there's just a certain way I have to teach it, a certain kind of like 1, 2, 3 step I have to go through. Otherwise it's too hard to teach, I think. So,
Or, one of these. So
the more you
now
understand it, the
we're
more
at
you
1
understand
o'clock,
it.
2300.
Nice, Inuk.
The next candle is going to be what can set up that 4-hour hard close. It can confirm it. So the next candle should theoretically be a large move up. And it actually just stabilizes.
I know the rationale, but still, yeah.
Oh, did I get that wrong? 23, 3
And it's
o'clock.
even
Oh
like,
my God. Yeah, my
God, let's pause this again. Make this session last all day. Okay, it's even like procedural analysis, and you go and you do PA and blueprint, and you're like, oh, it's great, but I'm not a good trader yet. And then you do CA, and you're like, oh, I completely get PA. And then you're going to do RA, and you're going to say, oh, I completely get CA. And then it's not until you master RA that you're going to say, oh, I completely get RA. You know what I mean? You're always kind of working one course behind in a way, until you get to the end of that course and can review it in a deeper way. And then you can say, oh, I actually get it now. So you won't understand completely how PA and CA are connected together at all levels until you're done RA. And then when you remaster RA, then you can understand RA afterwards, right? So it's like, yeah. Okay.
times are off.
I love this
I thought 1 o'clock. It's not. It's 3 o'clock. So then this one should be it. And that's what it is. So if the 3 o'clock candle opens and you've already hard closed that time frame, you've confirmed the ladder. So there's a confluence there, and this is adaptive charting, right? And then even I'm sure if you were to take this back, you would even break your smaller time frame as well. In the moment, you'd
Super
probably be
appreciative, of course.
laddering up against
Yeah,
this.
of course.
You'd have
Absolutely,
your
man.
next entry. If for some reason you missed this one, your next expected entry, and this was already hit, your next expected entry should be somewhere on this range, somewhere between this and this candle. So the price difference between 932 and 930. So that's fine. You can use whatever the maybe there's a bigger valley here. Then there's a bigger move right there. So 932.35. You can use that, no problem. So this is all a part of risk assessing a move, and this end usually a lot of holding here, and probably just break its trend. No, it actually goes back down and gives a second entry there. That's fine. And then breaks its trend, right? So that's kind of that moment where it breaks its trend. It continues to hold its move. I don't think you're going to get entry much lower than this. At this point, your entry would be maybe here if you're lucky. I don't even think you're going to be able to get entry back on this trade. I don't think you're going to be able. Yeah, no, okay. So we're current actually. So that's kind of perfect, right? So this is all a part of, again, an umbrella of lessons where you have to be able to not just enter greedy hold levels, because while they're great, they're huge money makers for sure. But then there's an adaptive nature to our charts where these things are changing all the time. And then it's like we always say, we can only see one step into the future, which is true. And with charting, you're always going to have some type of level that other people want to buy. Maybe there's some guy here. You can't stop people from saying, I want to buy 1,000 Bitcoin at this price. When really it should have went down here. And you've seen it where there's a 500, 1,000 Bitcoin wall, or there's a 200 Bitcoin wall, and it sits there and it gets, eaten up, and that's 200 Bitcoin gone, and then it just gets another 200 gets put back there. And so maybe this is one person who wants to buy 2,000 Bitcoin here and just does it 10 times in a row until it just refuses to go down to this level. Or maybe it touches this level on another exchange, but on Binance, which we're using on this chart here, it ends up just holding this level, because you can't stop people from doing that. Not everybody knows the science this deeply, but the biggest players in the game do. So the move gets supported, right, where it's supposed to. So this is all a part of understanding that there is a developing criteria that happens on your charts, and it's this, it happens with trends, it happens with levels. So this is one example of risk assessed trading, right? And why I call it risk assessed trading is because you have to assess the risk of the move on the fly, because you're not simply using a criteria where you're sitting here and saying like this, oh, here's the 1 minute level. That's perfect. It should go to here. Technically, it should just go to the greediest point, which is right here. This is perfect. I mean, it went to this one back here. So why wouldn't it just go to the next one, to this one here, which then brings you to this one here, right? Like this, it brings you to this one here, which brings you to this one here. So why wouldn't it go after this? Well, it's not always going to. It's going to slip through this level like it doesn't even exist as soon as that hourly level that establishes this move is there, that this hourly right here. As soon as that's there, and that's what's holding the move, that's holding the range. Just like on this top side, right? You know, should you have gone here? Yeah, at a minimum. Should you have gone here? Probably. And should you have gone even deeper in this range? Yeah. But what did you do? Well, you went after this right here. You went after, I believe it's a 4 hour it went after. Yeah, it's a 4 hour. What did it do? It went after this part of the range, right? So this is uncontrollable variables that we simply can't. Oh, let's double check, make sure there's not another time frame. No 12 hour, no daily. This is an uncontrollable variable that ladders the move, right? We can't always buy the greediest levels. When they get hit, they get respected, sure. And so the theme has been go after the greediest level. If it doesn't get hit, there's no money to be lost. And if it does get hit, hey, you're going to make a ton of money because that level is going to get respected and it's going to launch the move, it happens here to the T and it happens, on these different places and you make the maximum amount of profits. But that doesn't mean it's always going to do that infinitely, right? So, and this is part of what makes me such a good trader is that my ability to assess things on the fly. I call it chart architecture. My ability to assess things on the fly is so strong because there's not much that slips by me after doing this for so long. There's not much that I miss on these charts. So it's part of, if there were a butterfly effect 2.0 or if there were something else that I were to ever do another day, it would be simply just assessing in the moment dynamic pieces of the move, right? So part of what makes, again, me such a good trader and me so strong as a trader is that, how I don't miss things really is that I'm able to dynamically pick these things apart like that. So that's part of one of my secrets and how I'm so good. And you can see, as I explain the move here, I can kind of tell what's going on before it's happening. We're in a 1 hour chart here and I said, oh, this is a 5 minute backside right here. So I can instantly snap to that time frame. I guess it's just an experience thing. Just part of the way my brain works and how I can see this. And, I've been able to reverse engineer these things for quite some time. And, so when I see a candle that looks like this, I know, okay, this is X backside. So I can already kind of understand what's happening next. And then, when I say, oh, this is touching that, I can see this trend here. There's a 4 hour. And then I know on which hour candle it's going to break up, unless I make a math mistake when I thought it was one in the morning, but it was really 3, right? So this is all a part of, again, why I'm talking about this right now is it's a part of understanding the dynamics of the charts and how we have to assess moves differently based on risk. So we're going to do another one, but this time we're not going to do it with a hold level. Well, we will, but we'll do a conjunction of the hold level with a trend somewhere. So if we were to see a move down, maybe we can do this right here. Okay, so let's erase what we have, and we're going to say first off, where's our target? The target is something like this, right? Okay, that's fine. Target's this. Maybe there's a 4 hour here. Yeah, even that might be nice. I don't think there's a daily on this one. There's not. And maybe there's a 12 on this one. Not really, but then there's something in between 4 and 6, maybe. Yeah, it's a 6 right here. So that's fine. Better than the 4 hour. It is the 6 hour. And you'll notice I'm using a different time. There's going to be an hourly higher, of course. So now you've got 2 levels that you could introduce here. Really doesn't matter which level you take because it never hits here anyway. So what we're going to do is we're just going to use this and say, okay, well, it should have went here, but it doesn't. Instead, it goes after, I think it was a backside 4 hour on this one. Greediest point on the 4 hour, right? Possibly this is a 30-minute as well. Oh, the 30-minute is there. So that's fine. That's not really there. So we're just going to leave it on the 4 hour. I don't think there's any other time frame that can be relevant here. There can't be. There can be smaller parts of the body of this that break down a 5-minute piece right here, but they really, it's not what we go after. It's simply just the 4 hour. So this, anyways, again, this criteria is just to see where it was supposed to go, right? It was supposed to go here, somewhere up in this range. It stops here. So how do you assess this part of the move now? Okay, so fine. We were going to have a trend like so, and that's going to shortcut to here. I believe this would be a 12 hour. Nope, the 12 hours right here.
So that's just simply when I'm saying shortcut right here. It's just creating global local.
You see that's representing the move pretty well. And then so you'd have, this should be the short right here. This should be the short. Let's make sure we understand that. That should be the short currently. And then the next short should be, Yeah, I mean, this really should be it in the moment, 92.03. That should be the short of the moment. There's nothing there, nothing there. You could possibly get to 92.50 here. 9,300. You know, you could go back up to this range here. You could go to this 93.55 range right here. Whatever this is here, this piece of this range that this has been testing. So whatever this is, you could deep dive this to create the base off of what this is testing here. So this is testing, come on, the backside here. So it could go to something like 93, a little over that. So yeah, okay, it could go all the way up to 93.82. So,
Just do the
that's
value before
some of the
there?
levels we're going to use. Okay, so let's just play this
Right
through.
here.
Go after your first target. Perfect. So you'd short there. So that short would be executed perfectly fine. Really, you'd want to be getting out of this trade if you see the range holding. Is that where we are currently in the move? Oh, this is a terrible one to use. Oh, so Jesus, that's a terrible one to use. What am I doing? Okay, we have to use a different part of the move. Well, at least we were right with this. That's fine. Okay, we have to use something else.
When I watched this on my own, I thought this video was more about following the trail it was tested. Yeah, I think that's what most people think, but then the reality becomes it's about introducing RA for Butterfly Effect 2, and then the next following lessons were just about teasing Butterfly Effect 2 reverse levels, like a deeper part of the architecture. So, yeah, I mean, I don't think there's anybody in the world who realized that RA and risk assessed moves, like RA is something that ties it all together. I don't think there was a single person who thought that there would be an RA. I mean, maybe nobody ever asked me though. So yeah, I think that's you're not alone on that statement. I knew. Reminds you of chart dexterity. Yep. Having that dexterity to flow through charts. Yeah, absolutely.
Let's use this part of the range up here, not that. I think that's what I was intending to do from the start anyways. Okay, so let's delete this one here. Actually, you know what we can do? This is where it should go. So there should be something in here. So we should kind of define some targets below. This range is kind of already tested there. So you'd be more, yeah, that's tested here. Base of the move right here, 91.58. And then you'd be down here lower at 90.89. And then even down here lower. So we can define kind of the two expectations here. So and we're just going to do 30-minute charts here. That's fine. That's I remember this is a pretty important level here. 90.13 is fine as well. There's let's make sure, check the hourly. So probably more likely the hourly here at 90.31, but we also had 90.13 there, which is fine. So anyways, we're going to do this with some trends now. So this move, let's talk about it for a second. You've come and you've tested this part of the range right here. So this 93.71, you've tested it off of this right here. So you have tested this part of the range. If you're going to go up, it's going to go and test the second part of that range. But really right now, it looks like potentially creating a base on a larger time frame, right? So you kind of have the top and bottom of your move here. That's been hit on that side. That's been hit on this side. You'd have your trend like so, holding the move up. And this simply just looks like it's going to go and hit the next part of its range. It's kind of in this moment where it's laddering up. It's not, it's deep diving this level a second time. You can see it's respected it there. It's deep diving it, possibly breaking the move. Now you have this. Your target wasn't really hit, right? But then you have this as a hold level right here. Your target could possibly be somewhere up there. This is kind of confirming, if this continues to hold, that the move is going down, right? And it doesn't continue to hold. It actually breaks up. So that's quite simple. This now just moves to here, right? Never gets hit. Wonder if it comes back up and hits it. Never gets hit. So herein lies a problem. Okay, let's delete some of this noise off the chart. Let's delete this level. Let's delete this level. Herein lies a problem, because this is where entry should have been, right? So this is that same problem where you're risk assessing a move, and this is where it should have gone. Keywords should have, and then even we can probably go to a 1-minute chart and see where this trail exists and say, yeah, okay, fine. There's the 15.
Reactive charting right now, right?
It could possibly that.
Like if you were to go back to here, now that you understand risk assessment, you could take this 15-minute level right here, right? Like this 15-minute level right here. You could take that and you could RA the entire range to see what's actually able to get hit, right? And if something had already gotten hit in there, you could see if there's a trail from here or if there's some type of interior point between the actual level test, the wick, or the body, right? Like if there's actually some kind of combination level in there. So this is interesting because you look back at this and you say, oh, wow, this was supposed to get hit. Herein lies a problem. Well, yes, and that's what it is that the risk assessment component isn't there, right? That RA component to understand which piece of this range was tested never gets created.
Herein lies a problem, because this is where entry should have been, right? So this
So
is
RA
that
would have
same
solved that
where
problem.
you're risk assessing a move, and this is where it should have gone. Keywords should have, and then even we can probably go to a 1 minute chart and see where this trail exists and say, yeah, okay, fine. There's the 15. It could possibly, that can't really go to there, can't really go to there, can't really go to there. So it actually doesn't really have a spot it can go to. It can go to here, but
So if we can assume that that 15-minute body is right here, we're on the 1 minute time frame. We can assume that there's also maybe a 5 minute right here or right here, one of the two. I'm going to say it's probably right there, just the way this looks. That's probably the inverse 5, which as you RA this, and that would be, you know, your 10 out of 10, your 9 out of 10 right here, right? So this being hit on the opposite side would have, so stay with me on this one because this is going to get a little bit down into a little complex here. So if you were in this trade, right, looking for a short, this is your 5 minute, which is a 9, which means it has 15 minutes only with a spread of, you know, 5 or 10 minutes there. You know, a 5 to 25 minutes to establish. So when it gets hit right here, that 5 minute, when it gets hit right here, and I'm assuming this is a 5, it could also be a 3. Anyways, it's going to be a 9 out of 10 because there's going to be one more polarized point up there. You can see it. This is actually tested. That's tested. This is not. This could also be the 10 out of 10. Now it's not going to make a difference in our example, but I'm just looking at this and that is tested. That is tested. So you have to almost go to a 3 and a 5 now to see if there's a 3 minute untested here and where that starts. Because if it starts right here, it's going to be tested here. The 3 minute starts right there. It might go straight down. So you can't see the 3 or the 5. Either way, 9 out of 10, you see this hit of that level. 1, 2, 3, 4, 5, 6. I think that candle right there, 6, 7. You have now created a time bomb for this to make a shield, right? So you're analyzing RA up here. This is either a 9 or a 10. It looks like it may be a 10. We can't tell. There could be a 3 minute here. So it could be 10, 9, or it could just be 10 right here. This targets your level, right? The RA on this would be, God, I want to say it's a 9, but it could be a 10. I'm going to say it's a 9. I'm going to say it's a 9 because it works conveniently for my example. But it also could be a 10, which also still works, by the way. But as a 9, it's easier to follow. So if we RA this at a 9 as entry, right, for the short, or whether you're in this trade as a short already up here, or if you're waiting to get up here, you RA this at a 9, RA becomes invalidated, right? Because your risk assessment is saying you've created your level, right? Or it becomes validated, whichever way makes sense for your mind. Your RA value is a 9 here, and the RA ends up becoming false because the risk assessment was broken, right? Again, this is a really dumb way to say it. I got to think of a better way to say it, but you've got 15 minutes here. You've created your shield. That time bomb is released. So that actually can be RA'd as the perfect entry as well on the short. When this isn't hit based on this is 10, this is 9. You develop that level, you can get re-entry on what it holds, which is right here. So you see the RA develops. CA is now in play, which means it's CA. You could take that trade. CA hits, you move down, right? So the RA has allowed that CA to justify that move.
Then breaks up over that
as the short.
So
and you can, the interesting part about this is you could have already done your, proactively, you could have done risk as 10 here, 9 here. And then when you see 9 gets hit and it develops under the criteria of the time bomb, that means CA is active, which means you can re-enter this level. When your 9 is hit, 9 becomes true. CA is active here. You can use that.
creating this problem already, right? Because you're hard closing this level. So even if you did short there,
I know
you'd
it's a little
likely be getting up
tough
when
to
you start
follow,
seeing
but
it
again, it's
pushing lower
butterfly
now,
effect
right? So
2
we can
stuff. I'm
actually
not
just
going to
rewind
go
this back to 50.
hyper in depth with it, but I will talk about it because again, we are getting there. And just like we do RA for this side of the chart, remember, oopsies, oops. Remember PA, which is connected into CA by RA. Once this is released, this becomes active. PA shifts to here to find targets. So PA is now reactive for this leg of the layer because CA is this half of it, just like CA is that half of it. CA is this half of it. CA is your shorts here, right? Comparative analysis happens against shorts, which should have risk assessment against it, which this is also PA. So PA uses RA to validate the trade. CA allows the entry of the trade, which then once the trade is executed based on CA, you go back into PA where this was CA back here, or going forward, you do CA up here, which is connected by RA right here as your shorts or targets. So if your target was here, you're doing your PA after you've entered your CA, you're doing your PA with RA to understand where targets are. And once that RA of those targets get fulfilled, CA kicks back in and allows that. So it always goes into this loop of CA to PA to RA, which connects PA to CA, short long. So CA, and then it would have RA and PA, right? So you just like kind of a constant loop. I know it's like kind of hard to follow. That's fine. The point is that if this was a 10 and this is a 9, your 9 RA hits, time bomb is released, CA kicks in right here, perfect level to enter, CA entry, you're down in the move, and it's the perfect re-enter spot. If you are going for 10 out of 10, but 9 out of 10 executes and time bomb becomes true. 9 out of 10 executes, time bomb is true, CA is activated.
15-minute level where it should have gone, and we can kind of work time frames down here because that should have been an entry. And then you're sitting there saying, oh man, this thing, it just never hit my target, never went after where it was.
This was supposed to be an easy lesson, by the way.
Right here.
Jesus.
Right? So this is kind of that same thing as that hour.
It's very helpful though.
So we have 2 time frames here. Okay. We have the 15-minute here, which is kind of where it should have gone.
It's beginning to make sense. Thanks. You're welcome.
And then we have a 5-minute that's actually holding the move. Just like before, when we looked at the charts below, where we had the 1 minute where it should have gone to that 1 minute. But then it
kind of is this beautiful, easy thing, right, Joe? Like
the bottom side in the first example.
I'm going to touch on that for a second. You say so easy. Okay, definitely everybody in here is going to like burn you to the stake. Like you just cast some voodoo on everybody. It's definitely not easy, but I agree with you. It is so easy when we can break it down and kind of add these steps, because it just does become this, you know, infinite loop where like it's, I hate to say it, but it's kind of common sense. Like if we do RA for entries, why would we not do RA for exits, right? Like if we do RA for entries, why would we not do RA for exits? And if we do RA for exits, it means that CA converts into PA, assessing our targets. And then once those targets are hit, right, through RA, right? Once those targets are hit, what makes sense, then your CA becomes back activated on the shorts. So it just becomes this infinite loop of doing this CA and RA against ranges, right? So you're right. There's this like really beautiful, easy way. So you're right when you say it's easy. It's just, you know, for your own digital protection. easy once, you know.
And continues to hold.
It's really not, but it kind of is in a way. Like it's a beautifully simple thing that happens, but it's just like, there's so many complexities inside the beautiful simplicity of it.
Hits it, it's holding the level, breaking through trend. Fine. Is there any other
You're
points
doing
of
RA
entry?
and PA constantly, PAC and RA constantly for 8 hours a day. That's
1
perfect. It's perfect. It's exactly what you're supposed to be doing, Sam.
After this, right? So your point of entry would be here, right? So this is, you know, very common.
It is beautifully easy, Joe. It is. You were actually kind of
trend.
Right without knowing you're right.
You're looking at
because all you kind of have to do is understand RA, CA, and PA,
but now
and that lies the difficulty. Then you just have to kind of rinse, repeat them.
Sometimes these moves, and
it's like learning how to
I would
build a
well, I'm going to
treehouse
say
for the first
sometimes
time
because
from
sometimes they
IKEA.
go after a higher
That
range,
first time
and
is like
sometimes they
super
dynamically are
frustrating,
adjusted
but
in the moment to find
build
where the
one and
hold
you can
level
build
is
a
holding
hundred.
it
You know what I mean?
is on a different time frame that you're not looking at because we can't always look at the 1 minute and then seeing where the greediest point of that is. So it's almost like this. If you were to have a 1 minute level right here, and we're going to do
My
it like
science is
this,
like a set of
kind of just
IKEA
use pen and
instructions.
draw.
Let's put it
If
that
your
way.
1 minute level exists right here, this is this 1 minute right here. Okay. And then that doesn't get hit. There is going to be a larger time frame that has stopped that move, and it itself is going to have a 1 minute level that's going to hold this move. So it in itself is going to have its own 1 minute hold level. So it will never actually go after the true greediest part of the range, but it may go after the greediest part of the range that gets respected. Right. So this is assessing risk on a move where you're
Greediest
saying,
part of the range
okay,
it gets
well,
respected in the pseudo group.
I didn't quite get into this move when it was the perfect entry up here. Maybe this is perfect entry or this is perfect
I
entry.
know, right?
But this also in a way reduces risk because you're confirming a larger time frame hold and it's going to have its own greediest point. So the greediest point of the range doesn't get hit, but then a higher time frame piece
absolutely,
of that
Sam.
range
And TA can
holds the move
be
down, and it in
referred to
itself
as
has
a
like a
market matter,
pseudo
right?
greedy level. So it's not the greediest part of the move, but it's the greediest part of the range that gets held. Again, this is assessing risk in the move and understanding that we don't always go after the greediest level. Sometimes we go after something else. And then also within this trade, you have something else happening, which is another part of risk assessing a move, right? You have this trend has been respected, right? So let's go and find where that trend gets created. It's not a 4 hour, so we can see it's not a 4 hour. Where's Mr. Trend here? It's not a 1 hour. Well, possibly could be a 1 hour, but we're gonna find where it actually exists. Would have been created prior to that. Aha, it's the 15 minutes. You see, you have the 15 minute, which is fair because you know what, this would have gotten created on a smaller time frames first. So maybe you had this trend here was the 1 minute, and then something like this would have been the 1 minute that breaks, and then that gives you the 3 minute right here, and that breaks, and then that gives you the 5 minute here, and that breaks, and then this gives you the 15. So that's fine. That's exactly what it would be. And then you'd have the hourly piece right here. And then when that breaks, you'd be moving down to the range again, and so the next piece of your story would be told. So we talked about the levels, risk assessing a move based on trends now. Okay, so this is the next part where you're going to be looking at a move and saying, okay, well, that's fine. We see the levels, so we're going to leave those two there. We're going to make this a different color because it's a little confusing that they're all gray. So this is a larger time frame. This will be the 15-minute is gray as we're using gray, and this will propose to be the hourly, which it should indeed be the hourly here. We're just going to go verify that. So that's fine. It's right there in the move. So well, it's actually right here. It's actually right there in the move, and then there's an early sign of it breaking right here, right? So that's where the trend is really holding to break. This is the actual trend, which is fine. So you can use either or. Difference of preference here of which trend you want to see: early entry on something or more accuracy, right? Just the difference of trend and how it gets created. This is kind of the final piece of the move down.
Right
So
after
you
every
can use
lesson.
this on a smaller time frame, or you can use a larger piece there, which is the more relevant part of it. So now we're going to go to this trade, and we're going to go back to right here.
Yeah, so I made a comment on stream about.
So this is the next part of this that you could.
Joe, you said it's very cool to see all the pieces connected together. So I made a comment on stream the other day that, just like imagine. Well, actually, might have been in mentorship. Actually, I think I said this comment. Imagine how we used to just do TA, and then you learn PA, you learn CA, now you learn RA, and it all kind of becomes simpler to see the end result every piece you get together. So when these layers start to get connected, they each independently, almost like I see it very much like university classes. Like you're kind of learning a subject each differently. Each different course has a subject that it teaches you. If you want to be an architect, in one course you're learning how to use a computer, in another course you're learning how to draw blueprints with your hand based on pictures. Two completely different things, but yet equally needed to be a great architect, right? The ability to use your hands and read books and look at designs, and then the ability to actually connect them on a computer. Again, two completely different skill sets. You almost have to look at it like that. So each kind of line of theory has its own value and difference from the next. But then when you start using them together, like, oh, I can think of a picture, and now I can, I can draw it on my paper and think of it from a book, but now I can actually put it on a computer and make it a real thing, right? Like it's kind of, you have to think of it like that. Like each piece is its own independent mastery. It has its own independent level of mastery, and then when you start connecting them all together, they just kind of work as one mastery, right? Like it just kind of works perfectly.
Assess this move. Okay. So
It's
there
easier
is
for
going to
BFE. Yep.
be a level that needs to get tested if this trend breaks, right? So you can see this one's already tested here. So let's go and do this in group.